traders at Axis Bank say they expect slightly bearish sentiments to persist today for the bond market over thin system liquidity. They also expect a mixed interest witnessed across the long end of the UMO and Treasury bills curve to continue today. Eki Teddy-Onaghise, Treasury Sales team member at Axis Bank, joins me to review trading this week at Nigeria's fixed income and FX markets. Thank you so much for taking the time out to join us today. Let's get right to it. It's been somewhat of a mixed week. I mean, talking to a couple of traders so far, it's been, thin liquidity, mixed sentiments as well. But how will you process it? What is your perspective on how market has panned out so far since Monday?
Thank you for having me. So as you rightly said, on the bond markets, we saw the bond auction conducted at the beginning of the week, where the CBN offered a total of about 140 billion across the 2026 and 2042 papers. We saw stop rates at those papers at 10.15 and 12% respectively, which was about 80 bips and 30 bips below the last stop rate from the previous auction. On the secondary markets, for those same papers, we saw activities on those two papers, probably because it was an auction, and it was trading far above, slightly above the stop rate at 10.17 for 2026 and about 12.72 for the 2042. So there was reduced activities in the markets. I think owing to the slow system liquidity of due to the debit of the bond auction from earlier in the week, there was really no sale on those papers, but there was a lot of activities on the bond market.
When do you expect liquidity levels to improve?
So we see next week we have FAC inflow next week being the end of the month. We'll also see a maturity of NTB of about 143 billion into the market as well. So that will improve the system liquidity, which will also impact on the yields of these papers. I
want your quick thought on the capital importation data just released. We saw portfolio investments accounting for 62.9% of total capital imported. How are you unpacking this data? What does it tell us?
So that level of capital imported into the system also reflects the level at the deals being conducted at the I&E market, at the FX markets. So what we've seen now, we've not really seen any interest for these FPIs into the system. I think from last year, if you have a ratio of what has come in at about 69% compared to the last, there's a reduction, being that, one, the capital flight of these FPIs, the ability for them to repatriate their funds out of the system has been very almost impossible, though the CBN has been allocating funds to these FPIs on a weekly basis for them to enable them repatriate their funds. But the report has come out, has shown that there's really not much that has been done on that aspect of the market. And I think the CBN is also trying as well to ensure that funds are repatriated timely, so that the FPIs can also bring in their funds for more investments.
And let's head to the FX market and talk to us about the Naira's performance against the dollar so far this week at the NAFEX and I&E window. And also, I mean, we're seeing reserves at 39.5 billion. We saw a slight drop, maybe not so slight, 975 million. But what can you tell us about that?
So trading during the week, we saw the NAFEX close at yesterday about 415.96, while the I&E closed at 416%. This also shows that there's really not much activity in the market. We've seen lots of demand in the market compared to the supply available, and we've just seen that there's really nothing that's been going on. The CBN has just been intervening for their usual SMIs, for retail SMIs, for FPIs, as well as invisibles and SMEs. So today we also expect the CBN to release the results of the bi-weekly retail SMIs that was conducted last week for importers of raw materials.
As we headed to the final week or so plus of March, just looking back to the beginning of the month, how would you describe, especially for institutional investors, who are, having to contend with, for lack of options at the market, contend with, much lower rates, of course, that whole negative rates, real return, etc. How would you describe the investment play so far this month for institutional investors? And do you foresee a change of strategy, or we're just going to have this status quo until, I honestly don't know what's going to come as a catalyst to change, things, but I mean, what are your thoughts?
So what I think is what has been playing out has just been, as we rightly said, in an almost negative yield environment. This trend is also going to continue to the end of the month, which I see, because there's really not much happening here right now. The rates at the fixed income market has just been on a reducing level, and I think that's also going to continue to the end of the month. So what we know that is that based on the level of liquidity in the markets, these investors, whether or not, I don't think the interest rates is what is really attractive. These institutional investors, they also don't have any other alternatives to fixing to invest their funds available. So what they just do is just to ride with the curve and see however it is, whatever they can get from it.
Well, final question, speaking about the curve, what should we expect in the coming week?
Next week, as I earlier mentioned, we have some inflows coming in. We expect the FAC to come in and a maturity of the NCB of about 143 billion. We think this rate will impact. We think these inflows will impact the rates of the market, and the rates on these instruments will also reduce. We trend lower than what it is as of today.